Hi, welcome to this week's video blog at MonsterMortgage.ca. My name is Kristian Harris, and I'm going to share a story with a phone call I received today. I got a call from someone who was referred by an existing client, and they said their mortgage was coming due with one of the banks. They explained to me that they were coming off a 5-year fixed, and their rate was in the 5% range. And at the time when they were doing this 5 years ago, they struggled between fixed and variable, and ultimately they were kind of sort of convinced to go with the 5-year fixed range, and it's easy to look back and say it was a right or wrong decision, but that's where they're in. And I kind of chuckled because when a client's at 5%, and obviously the variable in the last 5 years, if you followed the market or you have a variable, you're probably somewhere in the low twos. You're much better off than if you had taken the variable than the fixed. And ironically, the banks never seem to call these clients in the middle of the term and suggest that there might be something better for them. But on the flip side of that, I've received numerous calls from clients who will be in a variable with a bank, and they'll say that my bank has called me suggesting I should lock in, start to look at locking in as fixed rates might start to go up. Well, we've been hearing fixed rates are going to go up. They'll always go up, absolutely, but we've always chuckled, and I had the same answer really for clients, that if you're at prime minus 75 and you're at 2.25 and you've got 2 years to go on that, and the 5-year fixed rate is 3.5%, why would you increase your mortgage by 1.25%? Absolutely do not lock it in. Pay more against your mortgage, increase your payments, do whatever you have to do, set your payments at the 5-year fixed rate today. Pay yourself that money, not the banks, because all you're securing is the bank's profit because they've gone from 2.25 up to 3.5%. So it's quite funny that a bank would call someone at 2.25 suggesting they should lock in for security, but they don't seem to make that phone call to a client at paying 5.25% on a fixed rate, suggesting they should have gone to a variable at 2.25. So just remember, banks make a lot of money. We're talking billions of profit every year. Be leery, be careful. Don't forget, no matter what call you get from your banker, call your trusted mortgage advisor first.